Tell me about this name first. What does Eximius mean?
It is a Latin word. It means excellent.
Okay.
And it comes from this thought process that we want to back excellent founders on their way to building excellent companies.
And your focus is very much on AI and tech, deep tech enabled businesses. Is it?
Not quite.
Okay.
We are pre-seed focused. We also believe that, like while there is seed, pre-seed, the lines have started to get very blurred.
Okay.
People look at first institutional check as seed as well. But today we cannot always be thinking in dollars when we are spending in rupees and in INR. We need to look at what our expenses are.
Right.
And that means that in the initial days, no matter whether you have $5 million or $2 million, product development and product testing will take its own time. And similarly, hiring will take its own time. You can't find the best fit for your founding team overnight just because you've raised 2x or 3x the amount. And this was a similar, by the way, trend that has been seen in the US. As US primarily until 2015-16 had seed funding, and pre-seed was very, very small. Like if seed was 5,000, pre-seed would be 500. Today, it's almost equal. And to a certain extent, pre-seed has started to replace seed as either seeds have become bigger or Series A has become bigger. Coming back to where this thought process is coming from is that at that initial stage, the first 12 months to 18 months, there's only so much capital you can take to be able to expedite your journey. You need to follow certain process, have your head to the ground, and really create a execution plan and a customer value prop that is differentiated. For that, either people have raised large amounts of capital and are struggling to figure out what to do for the next round if they are not able to meet the traction, or alternatively, a lot of them are raising from family and friends.
Right.
To get $1 million or to get 500K, you're spending 3 or 4 months, you're pitching multiple people, you're trying to collect 10 lakh, 15 lakh, and somehow you've come up with this entire SHA that never works in tandem. I think that was a thought process that we want to streamline and institutionalize this. And as we, over the next 5 years, head towards that US journey of starting to see pre-seed companies taking capital to prove their early traction, early product market fit, and then right away either jumping to a much larger seed or much larger Series A, we would need institutional capital. And we would need focused institutional capital.
So how big is the fund?
The first fund is $10 million.
Okay.
We've
Fully
done,
deployed?
We are deploying that.
Achha.
About 22 investments is what we've done. And within pre-seed, again, if I were to come back to my story of pre-seed, we like to focus on a few sectors. I don't think India is deep enough where you can do a sector-focused fund just yet. That's my personal opinion, because the markets are evolving.
Yeah.
But you can have certain differentiation. So that's why we focus on fintech, health tech, online media, and SaaS. While large, still certain boundaries.
And your usual check is about 500K.
500K.
And how much equity you're taking in the first?
10%.
10%. Okay. So, and is there a specific geography you're focusing on or anywhere?
Primarily India. We look at companies that are wanting to build from India for the world.
Acha. So, okay. India for the world. Interesting. And so, why do founders choose you? Why should they choose you?
There are two aspects to it. One is the depth that we bring. For each of the sectors that we focus on, we create an entire ecosystem around it. What we call is our 3C framework or 3C approach. Content, community, and then quote-unquote check zero support.
Okay.
Content means that pre-seed has become synonymous to either underwriting an idea you just find fascinating or underwriting a founder that might have given exit or that might have good pedigree. But often that's not necessarily the case. Both of those translate to them having good thought process, but what you're ultimately underwriting is the thought process. Does this founder know if they're building in the fintech space? Do they know their customers well? Have they researched enough? Do they know what kind of product will work? And let's say if they come across certain hurdles, can they iterate upon their product? And I think that sort of underwriting requires you to first know the industry yourself.
Right.
And that's where we believe content comes in. While we're building content for the outside world, we are also building in process for ourselves to go deeper, to do customer interviews, to do product manager interviews, MNC and large sort of corporate interviews to see what are the gaps and where things are coming up. The second aspect is community. Because now, so I'll give you an example of, let's say, a fintech infra thesis that we built, where we believe that today ICICI, HDFC, Axis, each of them spend anywhere between $300 to $600 million on infra. A lot of this is on the services side. What that does is, while you can cater to the top 100 million, the minute you start going down to the next billion, you need these products to be more customizable.
Okay.
And for customizability, you need the better, you need infra, and hence there has to be evolution of infra stack or tech stack across most of these institutions, not just the top 12, 13 banks, but all across, down to the credit unions and the payment banks that are there today. So we started doing research, but to be able to do so, we met with banks, we met with NBFCs, met with product managers, evaluated companies, started to map out what were the products that they were. It's also complicated, right? You can't see it. So a lot of people say we are doing everything, but what is that everything depends on the API stack that they have. So starting to map out to that extent of what are the API stacks that some of these people are offering. We, of course, put this out in the public forum. That gave confidence to founders that they know what they're talking about. If we were to go to them, we'll also probably learn from their experience, but also gave us access to a lot of other people that we spoke with, that we could continue to interact with and build relationship with. And that's when a second sort of angle came in, which is community. Took all of that, hosted a community event, multiple small discussions, but a large, which we recently did in Bangalore, community event around fintech. And then that in itself has led to two of our companies being able to get 3 customers each on the B2B side.
Very interesting.
All of these companies were invited. We had put up posters with their products around. They've converted, and they're going to soon sign contracts as well. And because of that, one of the companies, which is, can't name them, but they're going to be raising from one of the top 3 VC funds right now, in a very crammed cap table, have given us extra equity. Cap table where one of the leading VCs from the last round is taking a secondary, or has been asked to take a secondary, but we are not just exercising a pro rata, we are getting 2% extra.
Wow, amazing. Because of this.
So I think that's what we believe, that if you focus and you really dedicatedly build out and deliver value, it just creates a flywheel effect.
Yeah, exactly. And like I said, like, you're going above and beyond, right? But then that's the relationship that needs to exist, right? Very, very interesting. And let's see, you also took on a co-founder about last year, right? So how did you find her? How are you guys working this out? You're in 2 different parts of India. This is like almost Odisha.
I think very similar backgrounds though.
Acha.
She comes from Chennai.
Okay.
I think where we are different is she's more into tech than I was. ComSci, MIT, tech focused, but then spent a long time in the US, worked primarily in the VC ecosystem there.
Okay.
And she was also very keen, to the extent where she launched her own VC fund in the US.
Really? Wow.
Which initially started as a feeder fund to Bessemer, but then of course they started doing a lot more as well. So when she was moving back to India, I think we were just connecting. It's more like a LinkedIn connect. We started to chat. This was back in January of 23.
Okay.
We spent about 5-6 months just meeting up with each other in Bangalore constantly, and then realized that while we were in 2 different spaces, there was just a lot of common threads tying us around. The way we've moved, the kind of things that we've been wanting to do. And she also wants to build it for the next 30 years.
Okay, wonderful.
That's where we connected. You're like, okay, let's do this.
So your co-founder is?
Her name is Preeti Sampath.
Preeti Sampath. And she's from Chennai.
Chennai, yeah.
Good. Chennai is really becoming the hub of deep tech in India, I think.
Oh, absolutely. All SaaS, not just deep tech.
Yeah. I'm even saying hardware SaaS, right? Look at the space tech companies coming out of there.
Yeah.
Very, very interesting. And so I read on your website that you said there is a large amount of capital for follow-ons, right? So what is the ratio on seed?
So we do 50-50.
Okay.
So typically the idea is to build 25-30 company portfolio, and then keep supporting at least 5 or 6 regularly.
Okay.
Until later rounds as well.
And then all the way up to Series A, or you're just looking at ending it at a pre-Series A kind of a round?
I would say that Series A is also up for grabs for a handful of them.
Okay.
Because today we are taking about 8 to 10% equity, and we have the ability to continue to support a few of them.
Okay.
And that's where I think you really make a difference in your returns. I've run multiple permutation combination to try and understand that if you do not participate in follow-on round, is there a way that you can generate alpha? In my head it seems very simple, right? Risk return. If you play the beta game, you'll only generate beta return. To play the alpha game, you have to take certain outlier bets, have to sort of go deep into the ones that are outperforming, and follow-ons are a way for us to go deep into the ones that are
Yeah,
outperforming.
actually, follow-ons is the most important thing that a venture investor should do, because usually in the first round it's very difficult to decide which one is going to win, right? But over the course of whatever 18 to 36 months, you'll realize which ones are going to win, and you want to have maximum amount of capital in the ones that are going to win, because the other horses that did not win have to make up
Yeah.
for that too, right? So
I think I read one of the quotes by one of the early partners of Matrix, who said, if I had my own way, I would do 10-90.
yeah,
10% early checks, 90 for follow on.
it's the right way to go. I think our fund is one is to three. So if everyone $1 or 1 rupee at seed, we've got 3 rupees in follow on. But now after our growth fund is actually we've got 10 rupees in follow on. So maybe I'm following the matrix one. What's the partner's name again?
That I don't remember.